Looking to get funded? Smart Prop Firm is your go-to platform for exclusive deals on the top futures prop firms. Earn up to 5% cashback and enjoy payout protection in the event your firm doesn't pay you out. Use code SMART at checkout. Click the link in the description to maximize your trading benefits.
Have you ever wondered why price sometimes seems stuck, like it's not decisively moving up or down after what looked like an ideal entry? For example, you take a daily into a 1 hour fair value gap and price just starts consolidating. Why is that? This is often as a result of what is known as trapped order flow. And in this video, I'm going to break down exactly what that is, how you can spot it, why it matters, and how you can avoid low probability price action. Let's get right into it. Now, before we understand what trapped order flow is, let's remember what order flow is. To identify order flow, we are looking at the most recent swing high and low with a fair value gap in the middle. And we are looking for this from a top-down basis, never bottom-up. And this gives us our bias and narrative. Now, what happens when order flow on two different time frames are saying two different things? And this is where trapped order flow comes in. So what is trapped order flow? Well, trapped order flow is a condition in the market where price becomes stuck between two opposing higher time frame PD arrays. But what are PD arrays? Well, PD arrays stand for premium and discount arrays. Think of them as key levels we look to trade from. Again, simply put, these are support and resistance levels. Premium meaning resistance, discount meaning support. A lot of people out there on social media, Instagram, Twitter, YouTubers, they like to overcomplicate this topic right here. Try to make it into some sort of rocket science. When you really get down to it, PD arrays are literally just support and resistance. And the sooner you can accept that and view it through that very simple lens, the better, right? Because the technicals and the charting and reading price action is actually the easiest part of trading. The hard part comes with managing your emotions and your psychology. So when it comes to trapped order flow, we identify it using fair value gaps and fair value areas. Again, the fair value areas, very simply put, are your three blocks: your order blocks, breaker blocks, and mitigation blocks. You can view those and just call it one thing. Call them fair value areas. They are the same thing. So really, you can just combine all those three PD arrays and view them as one. Again, simplifying where we can. So when price finds itself in between a higher time frame premium array and a higher time frame discount array, think of price as being stuck in a cage. It has no clarity. There is both a reason to go higher and a reason to go lower. We don't have 100% conviction for a one-sided idea. You can create an argument for price to do two different things. Therefore, if there's two different things price can do, we have 50-50 conditions. And when we have 50-50 conditions, those are what create consolidations and sideways movement. It's more likely we chop back and forth inside of a range, which is not where we want to be trading in. These are those low probability conditions that we aim to avoid. Now, this brings me back to the example that we began with in this video. We had this daily fair value gap, and we had a beautiful, or what seemed like a beautiful 1 hour impulse shift higher. You can also consider that a change in said delivery, even consider this a 1 hour unicorn as well. So why didn't this pan out? Well, trapped order flow. If we were to go one time frame higher and take a look at what's going on this 4 hour, let's take a look at what price ran into over here. This leg right here, this 4 hour order flow leg, is bearish, and we're coming into a daily fair value gap. And we see this 4 hour fair value gap that we come and sting into and that we never disrespect. So what is this? Well, price is now stuck between two higher time frame premium and discount arrays. The discount array, the support, is this daily fair value gap that we're coming into, right? That is the idea for price to push higher. But we're also coming into a 4 hour premium array, an idea for price to push lower. So what happens? We're trapped. We're in 50-50 conditions, and then that leads to consolidations, as we see right here, sideways movement. It is in between these two PD arrays that it's not the time to force trades. So what you want to do is you want to wait until price breaks out of this range, escaping the influence of at least one of those higher time frame PD arrays, because we want to remove that area of resistance, because once we do so, we will have no really opposing arguments, leading to a greater conviction and higher probability price action towards the opposing draw right here, which would be this daily ERO. Now you might be thinking, isn't the larger time frame the more powerful the fair value gap is? And you are correct. So why do we care if price is coming into, for example, a daily bearish fair value gap if it's moving off of a weekly bullish fair value gap? The weekly is indeed stronger, and in theory, it should send price higher and win that battle most likely. But that daily fair value gap, that daily opposing fair value gap, can still very much cause price to consolidate and create low probability setups, maybe sweep, sell side one more time before eventually moving higher. At the end of the day, it's still a strong resistance level, so we are better off waiting for it to be disrespected. So what is disrespect and how does that look like? Well, let's revisit candlestick logic. When price respects a PD array, what it will typically look like is a candle with a large wick with the body failing to close inside. When price disrespects a PD array, what that will typically look like is a candle with a small wick and a body closure over or through that PD array. So we are waiting for price to disrespect either one of the two PD arrays that we are trapped within. And this will make more sense once we dive into the examples. So moving back to this example that we've been looking at throughout the video, again, just to recap, just want to show you guys the daily context that we are within right now, daily IRL to ERL. And then 4 hour, we are in this 4 hour bearish order flow, right? This is what's creating that trapped order flow. 4 hours pushing lower, but the daily is pushing higher, creating a trap right there for price. So we formed this consolidation range, right? We have this rejection low off of that daily fair value gap, and we have this rejection high off of the 4 hour fair value gap. These rejection highs and lows are what create that consolidation range. So alongside with just seeing price close through that 4 hour fair value gap to disrespect it, we can also use these rejection highs and lows as areas to look for signs of disrespect through. So for example, we could have either right here, we would have closed above it like this and disrespected that 4 hour with a candle body closure. Great, we can already start to look long. But we rejected lower again, consolidated, and now we have formed this rejection high and low. So now what I'd want to see is, if I want to see higher prices, what I'd want price to do is displace above this high, close above it, right? Disrespect it using candlestick logic. Ideally create some sort of displacement through that, and then we can look for longs towards that high. Whereas if I'm going to look for shorts, same thing, but for the reverse. The rejection low right here, I would like to see price displace through it, create expansion. For example, 4 hour fair value gaps would be ideal there, down towards previous week's low, or pretty much just the low of this daily order flow leg, right? That would be failure to offer fair value right there, likely seeking liquidity at the swing low that creates the fair value gap. That's what I refer to as flip context, but that's for another video, so I won't dive too deep into that. So in short, we're just waiting for price to displace and close above one of these rejection highs and lows, just get out of this consolidation range to ensue good price action again, right? So let's just see how this played out. And we're going to notice that price comes and takes that low. But what happens? We don't close below it, right? This is what is a respect of a level. We are respecting this discount rate, this swing low. That swing low is a discount rate. It's a support level. And we're respecting it because we did not close below it, and we saw a large wick form right at it. And this over here is a disrespect of a premium array. This swing high is a premium array, and we're closing above it. So now we have displacement through it. We're creating for value gaps, and now we can look at potential trade setups, high probability trade setups. So we move along forward in time, we will have a 4 hour for value gap created right there. Beautiful. This already, if you're a swing trader, is a beautiful entry. You can enter right there, stop loss at the bodies of this swing low right here, and just target a static 2R, and this is what that trade would look like. And let's see how that one would have panned out. Completing context and the 2R right there. Now here are in our next example, and this is the dollar. And as always, we're starting our analysis from the top down. We are on the monthly, understanding that we are in monthly bearish order flow. Okay, but that's not really relevant right now. So we can use the other concept that I use when always looking at top-down analysis, which again is order flow and candlestick logic. That is how I determine my bias. And that is all I'm looking for when I'm doing my top-down analysis, starting on the monthly right here, right? So order flow, okay, cool, it's bearish. Candlestick logic wise, we can just read these few candles right here and get a lot from that. All right, so what's happening right here is we're sweeping this monthly swing low. That's a discount array. If price respects a discount array, it's going to want to seek a premium array. So the next premium array that we can target is pretty much only this monthly swing high. So on a monthly basis, I'm bullish, but I have to confirm that with the lower time frame order flow still. So I'm going to move down to the weekly. And on the weekly, there's not much we can gather in terms of order flow. There's no weekly for value gaps that we can look for. Again, the high that I'm looking for price to potentially draw towards to is that one. But there's not much information that we can gather right here. So I'm going to dive into the daily. And on the daily, this is where things get interesting. Because if you'll notice, we have daily bullish order flow right here. We have a daily bullish order flow like created, and we are retracing into an area of fair value right here, this overlapping fair value gap with this down close candle. You can consider that your order block. Again, it's literally all the same thing. Order blocks, breaker blocks, mitigation blocks. Those are your areas of fair value. So you will hear me refer to them as such. So here's that daily bearish fair value gap now getting tagged. And I already know so many people who would just view price through the most recent order flow legs and say, oh, look, daily bearish fair value gap. Let me look at a 1 hour, because daily to 1 hour. All right, let me look for my 1 hour displacement away. Okay, awesome. Look at this. It's an entry. Let me target 2R from here. And bang, that's an A plus setup. Where that is very, very wrong, because what you're missing is that daily bullish fair value gap that we have come into. So if you were to take something like this, for example, and get tagged in right there, this right here is a very avoidable loss, because overall we still have that idea that we can push higher. Why are you taking shorts right here against that, right? You're trading in 50-50 conditions. That is a low probability trade right there. Again, also coming into this bullish 4 hour fair value gap right here, created off of this daily bullish fair value gap and fair value area right here. So you just have a whole lot of opposing arguments to be made. Now, again, when can we get out of these trapped order flow conditions? This goes to observing candlestick logic and disrespect certain levels. So one way is, again, we just close through the daily fair value gap, disrespecting it. Some might consider that inversing it. I'll just call it a disrespect. Or another way is, if when we're dealing with the daily right here, we can even go down into the 4 hour and get an earlier sense as to when this is likely to disrespect by just marking out the rejection high right here. Now we're waiting for price to disrespect it. All right, so this candle right here has not disrespected it yet. This is respecting it because we are wicking it. We are waiting for a candle body closure through it, ideally with fair value gaps. So let's move forward in price and see if that, or when that happens, which it happens right there. So we create this 4 hour fair value gap right here, and this 4 hour fair value gap would be something that I would be interested in looking for longs out of. Again, it becomes very tricky here though, because of this gap we had right here, which is not very nice for a stop loss. So this right here, like longing something like this, is not really logical. So that wouldn't be something I would do. We would just have to wait for some sort of lower time frame setup that occurs in there. So let's just move forward in time for our fair value gap getting created. Now we don't see the strongest respect, and what we also get is an opposing 4 hour fair value gap. So now we're a bit uncertain again. So what I would do is wait for 4 hour fair value gap right here to get disrespected, to now again look for higher prices. But until this doesn't get disrespected, I'm not interested in longs, right? We have this area of resistance right here. So we wait. We'll wait until that gets disrespected. So let's see if that ever happens right here. And it does right here. So now we have this 4 hour fair value gap getting disrespected. Now, if you want to look for longs, since now we're just playing this, basically this is flip context. We'll go into it a little bit in this video then. We could go down one time frame and look for 1 hour fair value gap pointing higher right here. So if we go down to the 1 hour, we will notice all these 1 hour fair value gaps. Now, unfortunately, this trend is so strong, we haven't even gotten a chance to retrace into these. So we will just have to let this one run without us. Now, eventually, we do create a 4 hour fair value gap right here that we do retrace into and end up completing that daily context. But if we rewind to that 4 hour context, which if it was aligning in a good kill zone, it would have been a great trade. Now, again, regardless if it played out, I am not trading in the afternoon on dollar or on Forex in general. That is more times than not a very bad idea. Yes, I'll show you right here it playing out quite nicely, but that is out of time, right? You always want to have price and time aligned. That afternoon session, Forex typically does not move well. So it's not something that I would recommend. That being said, beautiful delivery. Now on to our next example. This is the Euro-Dollar monthly chart. And as always, starting from the top down, we have this monthly bullish order flow leg. We have just been trending higher. Great. I have a bullish bias. Now I need to go down to the lower time frame. So one time frame lower into the weekly and see if we're working with any order flow that we can look for potential context of. And over here on the weekly, we see that, right? We have this weekly fair value gap overlapping with this old swing high. So nice overlapping level we were coming into and starting to reject higher right here. Cool. Now let's go down a time frame and see if there's any sort of daily fair value gaps in this overall bullish rejection that we're seeing to refine the area that we're working with it. And over here, we see a daily fair value gap. So this is great. We are working with potential daily IRL to ERL context. Now, before we go into the 1 hour here and just look for the first 1 hour fair value gap right here, which I know a lot of y'all out there do. I know you guys know about the alignment that everyone talks about all over social media, you know, the daily 1 hour 5 minute or the weekly 4 hour 15-minute alignments. And a lot of people out there follow those way too strictly, avoiding all the time frames in between, where that's where a lot of people mess up and start taking low probability trades, because they start ignoring certain time frames. Like if you're going from a, for example, daily 1 hour 5 minute alignment, you can't just skip the 4 hour. You need to know what that's doing. Same thing with the weekly 4 hour 15 minute. You can't just skip the daily when you're jumping from the weekly to 4 hour. That daily time frame is so important. So if you take away one thing from this video, I hope you take away the fact that you need to be looking at all the time frames, because they all work off of one another. They are all relevant. So here we are on the 4 hour, and what we'll notice is that we have this 4 hour bearish for value gap going against us. So this entire area in price action is that cage that we're stuck in. We have an idea to push lower and we have an idea to push higher. 50-50 conditions, we're trapped in there. And we have actually developed an indicator that can identify for you automatically these trapped order flow conditions. So it's called the shield, and I'll enable it right here for the first time. It makes life a whole lot easier and will help you not miss a lot of these signatures and price that we've been over in this video today. So for example, the shield indicator is now on. If I were to move one candle forward, you would notice that right there for a brief second, it said potential trap. And once price entered that, we have now officially trapped order flow. And what it does is it's now marking the trap top, which is the high of this 4 hour for value gap, and the trap bottom, which is the low of this daily for value gap, right? Those are the levels that we would want to see get disrespected and displaced through. And what it also does is it now makes all the candles that are within that trapped order flow range inside of that cage, it makes them hollow. So as you can see, this candle right here, let's actually drop down to the lower time frame. This candle becomes hollow. Now, remember what I was explaining earlier, for those of you who just go from a daily to 1 hour, this for value gap right here would be something that I know a lot of people would long. They would do something like this and look for 2R or whatever. We'll go for the whole pie right here. And that's a very low probability trade setup. And the shield indicator right here gives you the heads up by marking out that price action as hollow, meaning you don't want to trade that. As you can see, none of this is an entry that you would want to take. You don't want to take that 1 hour, right? The indicator is signaling that that is low probability. And the colors return to the candle once we get out of that trapped order flow and close below that trap top and trap bottom that we had marked there, as you can see right here. And we designed it in a very minimalistic way, not to overwhelm or overcrowd. As you saw, it was literally just a few lines, the hollow candle, and we have a shield warning up here that just tells you, like, gives you a heads up as, hey, you're in trapped order flow, careful. And now that we're properly disrespecting that daily bullish for value gap, getting a daily body candle closure below it, as well as also running this rejection low right here and closing below it with a body, as well as creating a 4 hour bearish for value gap right here, we have all the signatures in price to look for lower prices off of that level. And now my bias would flip from bullish from this daily IRO to ERO to bearish in what I would consider flip context, where now the daily is failing to offer fair value. We are now likely going to seek liquidity at the swing low, which created that fair value gap. So that would be this level right here. And let's just see how that plays out, eventually completing that flip context. So here is your trapped order flow checklist. First, you'd want to do your top-down analysis, marking out the order flow legs. And again, if you don't know how to do that, I have a video that I will link in the top right that goes just over that exactly. Step 2, once you have a context area you want to trade from, look at the first opposing higher time frame PD array that is within that higher time frame context. Step 3, that opposing PD array in your context area is resistance and can trigger trapped order flow. Step 4, you want to wait for price to disrespect one of the PD arrays that we are trapped within. Step 5, once price has escaped the trapped order flow zone, the market has low resistance to its next drawn liquidity. Step 6, now is the time for look for entries, as price is likely to move with momentum. Now, I hope you guys found this video insightful. As always, I'm always inside the Discord. It's free. If you want to join, I'll put the link in the description. If you have any further questions on any topic on this video, join there and just ask away. I'm there for you guys. And if you are interested in trying out the trapped order flow indicator, which is also part of, an all-in-one package with the order flow indicator and the navigator indicator, etc., as well as, we have a huge SMT indicator update coming soon, and access to the entire indicator course, which is pretty damn sick. You can literally try it for $1 now for 7 days. It's literally $1. I think that's a no-brainer to at least give it a shot. If you don't like it, you could always just cancel before the 7 days are up, but at least you try. But I have a good feeling you're going to enjoy these tools because I use them in my own daily trading, and the amount of mental capital and time, most importantly, that saved me is just ridiculous. So try it out. The link will be in the description. And lastly, if you're still watching right now, I'd really appreciate, if you commented what you learned most about this poster, videos that you want to see from me next, as well as hitting up the video with a like, maybe a little subscription. That would be very appreciated. It would actually genuinely show me that you guys value what I'm doing, and it would inspire me to actually be more active on the channel and create more videos. Anyways, love you guys. Peace out, fam. Until the next one.